Hello friends, a very warm welcome to my channel. In this video I brought to you another very interesting company which is into a couple of sunrise sectors like the power sector, railways and the industrial goods sector. So this company could be a good stock to play the power or railway theme in India. But before we talk about the company, if you are new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos which I upload. And if you're not a part of our Telegram channel, do join today by clicking the link in the description so that you join the correct Telegram channel. Every day morning before the market opens, I share my views on the market as well as my portfolio allocation strategies which will help you increase your portfolio returns. So let's begin the analysis of CG Power and Industrial Solutions. This will be the flow of our discussion today. We'll talk about the business model in brief. We'll look at the chart of the last few years. We'll look at the last 5 years numbers of the company, the main financial parameters. We'll discuss why the stock has given such a big rally post-COVID. We'll look at the outlook of the management going forward. We'll discuss the valuations of the stock at present. We'll talk about the risks of investing in this business and then form an overall view about the stock. So CG Power is a Murugappa group company. So this group is a conglomerate of different businesses and they have a very good reputation in the Indian markets. It's an 85-year-old company, although there was a management change and the Murugappa group acquired this company a few years before. There are 16 manufacturing units in this company and 2 subsidiaries, although the subsidiaries are not of substantial turnover when compared to the parent company. So this company was formed as a result of a demerger from Compton Greaves in FY16. And in terms of business, basically there are 2 segments in this company. One is the industrial systems as well as the power systems. Now what gets included in this we'll discuss in detail in the coming slides. And in terms of product leadership, the company has substantial market share in a lot of categories which they work on, and in respect of industrial motors, they are market leaders. Broadly, these are the 2 segments of businesses of this company. The first is the industrial systems and the second one is the power systems. In industrial, there are 2 main categories included, the motor and drivers and the railways business. When it comes to the power systems business, transformers, switchgear and other allied products are related to this business. So there are 2 subsidiaries of the company. The first one is Drives and Automation, which is a European company. This is a decent sized company with a revenue of about 326 crore turnover, whereas the other subsidiary, which is CG Adhesives Products, is not having substantial size. Now out of the 8,000 crore odd revenue of this company, this is a broad segmental split. The power systems division constitutes about 35 to 40% of the business and around 60-65% comes from the industrial systems business. Now when you look at the pictures, you'll get clarity in terms of the product portfolio. Now first we talk about the industrial systems business, which includes the motors. These are the industrial motors, general as well as specialized motors which are manufactured by the company. And the company is as a market leader in this space. Apart from motors in industrial systems, they manufacture stampings, drives and automation and a lot of white goods or FMCG products like fans, geysers, etc. Now into the second sub-segment of the industrial systems, which is the railway business. They are manufacturing traction machines, railway transportation and traction systems, railway signaling systems, and you will be happy to know that the company did an acquisition of another company recently which is into the train collision avoidance system, which is Kavach. Now coming to their other segment, which is the power systems, there are 2 broad sub-segments in this. First one is the transformers. In transformers, they have the capacity to manufacture high-end transformers which are uncommon in the smaller companies. Power transmission and distribution, both kinds of transformers are made by this company. The second sub-segment of the power systems is the switchgear segment. So this is broadly a very simple description of the business of the company. Now when we look at the stock performance, the stock has been into the consolidation mode for a very long time, but post-COVID, the sector came into the limelight, the company started performing, there was a management change and this led to a massive rally in the stock. The stock touched almost 800 levels and now it is consolidating at somewhere around 750 zone because of the recent market correction. But the uptrend still remains intact. In terms of revenue in the last 5 years, in FY21, it was a COVID impacted year. The company did a revenue of about 3,000 crores, which went up to almost 8,800 crores in the trailing 12 months. So there has been a massive increase, consistent growth in the revenue in the last 5 years. The same can be found in the EBITDA. FY21, which is a one-off COVID impacted year, saw a EBITDA of about 116 crores, which rose to almost 650 crores in FY22. So from about 600 crores to 1166 crores in the trailing 12 months, which is double in the last 4 years, is the growth in EBITDA. Margins other than the COVID impacted year were around 12%, which increased to almost 14%. So you can assume 14% as a normal business margin of this company. In the recent quarter, margins were appearing lower because of a one-off item. Otherwise, 14% plus can be assumed as a normal business margin. In terms of the liquidity position, the company is very strong. Return ratios of 46%, which are very impressive. It's a debt-free company. In fact, it has a cash balance of almost 871 crores on the balance sheet and investments of about 700 crores. When you read the profit and loss account of the company, do note that there is an element of other income of 684 crores in FY24. And in terms of cash flows, they are very strong. That also gets reflected in the cash balance of the company. Now, what led to the massive rally in the stock in the last 3 to 4 years? The sales drastically went up, profits went up much higher, there was margin improvement, and both these sectors which the company is operating in are into the limelight. There are sectoral tailwinds, government spends, which led to the re-rating of the valuations of this company. Now, what has happened so far is one thing. Now, what is going to happen going ahead? Let's look at that. So the management is doing capex in all the major products of this company. So in Q2 FY25, they have received orders worth 3,200 crores. And on a consolidated basis, including the subsidiaries, the order count was almost 3,300 crores in just one quarter. They did an inorganic acquisition by acquiring 55% stake in a company called GG Tronics, which is into train collision avoidance systems, which is in simple language called Kavach. So post this acquisition, suppose there's a Kavach setup being done, the company manufactures around 20% of the equipments there. But gradually the company aims to manufacture the entire 100% installations of the Kavach equipment in-house. So this opens up a very big opportunity for the company to compete along with companies like HBL Power. The company is also venturing into another sunrise sector, which is the semiconductor space, by entering into semiconductor design phase. In terms of order book, the unexecuted order book on a standalone basis as on September 2024 stands at almost 7,800 crores, and on a consolidated basis it's almost 8,000 crores, which is equivalent to the revenue of the company in FY24. So there is clear growth visibility for the next 1 year at least. Out of this, industrial segment constitutes almost 35% of the orders and 65% from the power systems. You can observe that in terms of the revenue split in Q2, it was exactly the opposite. 35% was from power systems, 65% was from industrial, but in terms of order book, it is reverse. So going forward, there is possibility that this mix can change. These are the capex which are in line and coming up in the company. You will see that all the major products capacities are being expanded. The motors capacity is expanded by spending 377 crores. And the revenue potential is 10 times, which is about 3,200 crores. This gets ready in FY26. Transformers are also undergoing expansion by spending 100 crores, and revenue worth 1,000 crores would be generated from this. This is getting live in FY25 itself. Motors and switchgear segment is also undergoing capex expansion. So by this you can see that the company is gearing up in terms of capacities for the order books which they already have. Now when you look at the valuations, they have significantly got re-rated. Earlier the company was getting very low earnings multiple, and now it is trading at almost 127 crores. I agree that the order book is quite strong for this company, and going forward there could be consistent growth, but having this kind of valuations of 127 times, earnings multiple, price to book of almost 32 times, market cap to sales of almost 13x is not sustainable for a very long time. In such companies, if there is something which goes wrong, if the growth gets hampered due to any reason whatsoever, then the PE derating can also be significant, which can be painful for investors which have entered at the top. In terms of risks, if there is any sector slowdown, economy slowdown, reduction of spend by the government in these sectors, it could drastically impact the business of this company. High valuations are always a risk of investing at these levels afresh. Order book is one thing, execution is another. So if the execution is improper or delayed, that could be a risk. There is competition in the space which the company operates. In fact, there are new companies entering the segment also, scaling up, expanding their capacity. So there is competition. And due to the capex done by a lot of companies in the same sector, if it ends up being capacities in excess, that could be a temporary slowdown for the demand to catch up. So now that you have understood the business model of the company in simple words, you've understood the growth aspects, you've understood the risks, valuations, and all the important points. What is your view on the stock? If you're already holding this stock, and if you are a conservative investor, you can start looking at booking profits in a phased manner as and when the stock price goes up. But if you're an aggressive investor and already holding the stock, you can keep holding it till the company performs in terms of results. Now, if you're looking at taking a fresh position in the company at these kind of valuations, the risk reward as a value investor is not in your favor. You should wait for a correction in the stock, get the valuations to be normalized, and then you can think of taking a fresh position. So buying a stock with a technical stop loss is a different thing, but in terms of value investing, the valuations are not very cheap at these levels. So that's about CG Power. I hope you like the crisp video. I have tried to cover all the important points in just a time of 10 minutes. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, do mention the names in the comment section. Even this name was picked up from the last video's comment section. Do join our Telegram channel by clicking the link in the description so that we can be in touch on a daily basis. Thank you for watching and have a wonderful day.